All right, everyone. Good afternoon. My name is David Rodriguez. I'm the head of Blockworks Advisory, and I'm joined here today by Tesfaye, who's the head of capital markets at Aptos Labs. Thanks for joining.
Pleasure to be here.
Before we jump to the list of questions, talk about how tokenization unlocks new use cases for real-world assets. We'd love to dive into your background at Aptos Labs, and even further, you've been doing this in this industry for a minute, so I'd love to hear more about your prior background.
Absolutely. First of all, thanks for joining. A tough act to follow. So as David mentioned, I'm Tesfaye. I'm head of capital markets at Aptos. Aptos is a large layer one blockchain, move-based blockchain, actually originated within Meta's Libra blockchain program. And so in terms of my background, prior to this role, I worked at a company called T0 in a very similar capacity, where I was head of capital markets and business development. T0 was one of the early entrants within the space of tokenization of real-world assets. Before it was actually called real-world assets, I've seen a lot of different acronyms over the years. That particular business was very vertically integrated. It had a number of different broker-dealers, placement agent, alternative trading system, transfer agent, retail brokerage firm, and of course a tokenization engine. So we were blockchain agnostic, and then my background before that's very traditional finance within investment banking and venture capital.
Awesome. So before we jump into some questions, could set the stage. RWAs and tokenization more generally, is a really big narrative. I think probably like 30% plus of all the topics that we've discussed here at DAS so far the past 3 days has been centered around this concept, and for good reason. I looked just yesterday, there's over $19 billion of total assets issued on chain today. It's grown about 30%, 25 to 30% over the past 30 days alone, and year over year you're seeing probably like 30 to 50% CAGR. But at the end of the day, it is still a drop in the bucket. There's over $100 trillion in the capital markets that we are trying to bring on chain over the coming decades. But there's a lot of good reason to be excited about this new vertical. There's a lot of promising signs. But with that being said, we'd love to learn what do you see as the most transformative impact that tokenization has for TradFi institutions coming on chain?
I think it's really just access. When you think about just the world population, 85% of the world population really doesn't have access to traditional financial services. So I think just access, whether it be to USD through stablecoins, or whether it be access to different financial services, microfinancing, portfolio management, and so forth, is really going to be the main, I think, driver and exciting part of the applications of blockchain overall.
Cool. When I was looking at total assets issued on chain, again, it's around like $19 billion today. 67% of that is private credit. I believe, and talking non-stable coins, obviously stable coins alone is like a $250 billion plus market. 67% of all assets issued on chain are private credit. I believe that there's like 20% is commodities, and then I'll bucket everything else under other for now. What is it about private credit that has, I think, driven its market dominance on on-chain asset issuance? And is there a follow-up question to that? Is there an asset class you think has surprisingly been a lagging asset class in adoption?
Well, I think just given the momentum we're seeing on stablecoins, I think that kind of the next evolution is kind of really like microfinancing, and then also the industry's emphasis on yield right now, fixed income kind of is a natural play. So I think even when you think of Aptos, right now we're right around third or fourth from an RWA.XYZ ranking perspective in terms of RWAs on chain. Private credit definitely is the major driver of the kind of the momentum we're seeing. And so it goes back to areas I'm most excited about when you think of like microfinancing and what that implies in terms of access to capital globally. I think you're going to see more yield-like plays come on chain, and then you'll start to see more equities. Equities were first the leading indicator in 2018-19 in terms of people pursuing that, and for a number of different reasons, mostly mark-to-market of equity, that subsided. And then I think now private credit and fixed income just more holistically is going to be the driver for the next at least 5 years, and then you'll start to see kind of more esoteric assets much further along.
So you touched on it about Aptos' like rise to prominence in like the RWA vertical. I would say maybe 6 to 8 weeks ago, you had a pretty big announcement with Pact, bringing $1 billion of RWA issuance on chain. Like you said, already making Aptos probably second or third largest chain by RWA issuance. We'd love if you could peel back the curtain on like what is, if you could elaborate further on that Pact partnership. Maybe even other potential partnerships you have coming down the pike.
Of course. So Pact is a team that just continues to execute. Pact, just to give you some context, does on-chain lending and securitization. They're focused on microfinancing within emerging markets. They've partnered with strong lenders and originators like LendingTree and Branch to really gain scale quickly. Over the last 2 months, they put $1 billion of total assets on chain. They've also put about $250 million of active loans on chain. They have access to already 20 million plus accounts. So this is an example of a business that's actually solving a real need. Talked about the lack of access globally regarding financing or financial services more holistically. And then at the same time, this is a team that's actually worked with traditional players to bring assets on chain so they can gain scale. Because right now, distribution is extremely weak when it comes to any application within RWAs. And then even further downstream, that has, of course, a very meaningful impact on any type of secondary dynamics because, of course, in absence of having strong primary markets, you're not going to have strong secondary markets. And then I think there's a second part to that question in terms of what's to come.
Yeah.
So you'll start to see just a kind of a broader breadth of products. I mentioned that for the foreseeable future, we think it's going to be more yield-oriented products or products that tend to be very, very liquid products that are good sources of collateral. That's why we've seen a lot of momentum on the money market fund side. But I think that's what you're going to see in the short term. And then I think you're going to start to see a lot more traditional products come to market outside of these two areas, and then you'll start to see a lot more breadth in terms of a wider variety of products that we're all kind of excited about, whether it be equities or whether it be very, very esoteric products like I know a lot of people are excited about like art and music royalty streams and things along those lines. But even in the traditional markets, those are very negligible in terms of distribution. So I think those are much further downstream.
Got it. We'd love to lean into your past experience at T0 because they were definitely like a pioneer, I would say, in this vertical. Over the past 5 or 6 years, infrastructure has been a big, I would say, area of capital allocation from a VC perspective in the industry. Over the past few years, we've seen really the growth of the high throughput blockchain. Back when T0 was a major pioneer here, and back in 2019, you really only had a few select chains to choose from. Not high throughput, high base or high transaction fees for end users was probably like a barrier of entry for TradFi institutions to come on chain. But obviously chains like Aptos where you have 150 millisecond block time, sub-cent base fees, that has to be like a really good, interesting angle as you talk to some of these TradFi institutions as to why Aptos is a great place to deploy their assets on chain. How has the conversation, I think, has it changed over the past 6 years from your time at T0 to today? Are the friction points today the same that they have, or the friction points they had back then the same that they have today? Or is it a completely different conversation just because of how much more mature the infrastructure has become?
So a lot to unpack there. So on the front part, on the T0 side, I think we were definitely ahead of our time, right? T0 was definitely one of the first entrants into the space, extremely vertically integrated. I was fortunate enough to have worked on a lot of the higher profile RWAs at the time, from the tokenization, which we were blockchain agnostic, to primary all the way through, of course, secondary. The emphasis on secondary that early in the life cycle, because I mentioned earlier, primary has been so weak, there was just less opportunities. And then if you look at the US, if you do a typical private placement, tokenized or otherwise, there's a lot of implications around lockup periods and so forth before you can actually even capitalize in secondary. So I think that emphasis on secondary that early on in this kind of industry probably was a little bit too early. And then in terms of basically friction points, I think also there was lack of assets, right? There's just lack of assets that really were pursuing that at that point in time, mostly middle market and below, and a lot of them were also at the beginning were residual from the ICO days, so the asset quality was not necessarily great. People thought they could tokenize a particular asset and suddenly it changes its intrinsic value, or suddenly it's going to contribute to distribution or secondary trading, which is simply not the case. And so I think a lot of these dynamics also basically were the kind of the reasons why there was slow momentum on that side of the house. And then in terms of just kind of, if we look at current times, kind of roadblocks that may have been roadblocks, not roadblocks before, or vice versa, roadblocks before that are not roadblocks now. Historically, there was infrastructure used to be an issue. That's no longer an issue now. Now we have a surplus of different infrastructure providers, whether it's custodians or other broker-dealers and so forth. Then distribution, that continues to still be an issue on the primary side. Regulatory line of sight, that's of course now we at least are all optimistic in terms of the direction that's heading in. And then outside the US, like in Asia and so forth, there's been line of sight for some time. So I think a number of the different roadblocks are being addressed, but still when it comes to distribution and it comes to just asset quality, asset breadth, there's still some issues that need to be reconciled, that will be reconciled over time.
What are the drivers for institutions coming on chain? Like what, at the end of the day, we're all here to talk about like, what is the power that tokenization unlocks? Like, is there something that is a recurring theme in these conversations that I think gives them that light bulb moment, be like, yes, I need to do this. This is the future because of X, Y, Z.
I think I really put it into like 3 different buckets as of now. Of course, there's a lot more different, unique scenarios, but really it's one, they're either looking for greater distribution. They're trying to tap into basically on-chain capital that continues to grow. When you think of like BlackRock with their Biddle fund, Franklin Templeton with their 40 Act fund, Apollo with their diversified private credit fund, these are all products that already exist. They're just trying to grow the pie, if you will. And then that's basically bucket number 1, just at this point in time, greater distribution. I would say the majority of the counterparties first, at this point in time, fit into that bucket. The next bucket is, basically streamlining back office, basically a friction, whether it's operational or administrative, and they're looking to leverage technology from that perspective. That's had, at this point, because there's some duplicative processes as different firms try to gain regulatory clarity, that's probably the next biggest bucket, but still not the driving factor just yet. There's a lot of pilots to basically reconcile and test that validity. And then the last bucket, which is further downstream, would be I want to offer very unique products that blockchain enables. And I really want to capitalize on basically growing the pie or the suite of different offerings in the market.
I want to double click on that last part. I'd love to hear from your perspective. Like, is there some examples of like new financial primitives, new structured products that you think are going to be come on chain and be unlocked because of the composability, the global liquidity demand, the ability to fractionalize ownership, all this? Like, is there something that immediately comes to mind, or is maybe again like a recurring theme that maybe has been some of the conversations you've had with some of these firms?
Yeah, I think from talking to different folks that are really trying to make a dent on the derivative side, I think a lot of different counterparties that historically had not made very, very complex products because just administrative hassle would be daunting, are looking to blockchain to solve that. They like the fact that they utilize smart contracts to enforce certain guardrails, if you will. And so really it's around how exotic they want to make the particular product. Also, when you think of like simple things that do exist, but they don't exist on the secondary side, like tokenizing royalty streams. People like the fact that they can monetize their P&L in that capacity as well, as opposed to just looking at it from just simple equity or debt.
Gotcha. When do you think you're going to see us do away with like dual ledgers? You talked about like all the back-end admin. The reality is right now, like every single asset that's on chain is also sitting on a ledger at these individual institutions, and right now there isn't cost savings. If anything, it's a cost adder, I'd have to imagine. How far away are we from like natively on-chain asset issuance?
Yeah, that's why I downplayed that second bucket around streamlining at back office and so forth at this point. I think it's just iterative. Right now, all the institutions are testing out the technology, getting comfortable with it, setting up the guardrails, and then over time, it will be the source of truth. Because when you think of just inherently what blockchain brings to the table, it overlaps significantly with like cap table management and transfer agent capabilities, right? So the fact that you have 2 ledgers, and we dealt with this historically even at T0, it was just certain counterparties needed that dual ledger in order to interact with us, whether it be from an issuance perspective or whether it be from a partner perspective.
Do you think technology needed to like do away with dual ledgers? Is that going to largely come from these TradFi institutions building products on top of like a chain like Aptos, or is it actually going to be like first-party products coming out of like the Aptos labs or some of these other like lab entities?
I think just from a scale perspective, it won't necessarily be products that Aptos or a layer 1 produces. It's going to be working with issuers of product, and then whether it's sitting at the issuer level or whether it's sitting at a TA equivalent or fund admin level, they'll be the ones that are putting the assets on chain or issuing the assets natively on chain. But I don't think it's necessarily going to be from products that Aptos issues. Also keep in mind that, of course, like all layer 1s, we don't have the appropriate licenses, broker-dealer license domestically or within all these different jurisdictions. So we're not also doing any kind of placement agent activity or secondary activity, but it will be most likely partners that we work with.
Got it. Where do you see like tokenization going over the next like 5 to 10 years? Is there something that you're really excited about? Obviously, I know you've like hammered home the point about like microfinancing, things that like these high throughput, low cost blockchains enable. Is specifically that the democratization of finance, and so especially like a lot of developing and emerging markets. Yeah, I mean, I'd love to like hear from your perspective, like where do you think the next 5 to 10 years look?
So maybe a kind of a rapid fire set of different things I expect to see. One, I expect to see a lot more M&A. It was good to see, Kraken's announcement,
that was really
Ninja
cool.
Trader this morning. I think there will be a lot of M&A between just basically broker dealers and crypto counterparties, or vice versa, as people look to just basically offer both native blockchain products as well as traditional products, and hopefully there'll be that convergence. I think there'll be more crypto-linked products, like we see with kind of the ETFs as well as the ETPs. I think in general, I think over the next 5 years, you'll just see a lot more traditional products get put on chain. Like just like we see with money market funds, fixed income, and so forth. And then the value add there's going to be an emphasis on fractionalization. So they're going to give products that were maybe once reserved for a larger check size are now going to be broadly accessible. And then hopefully within the back end of that 5 years, you'll start to see a secondary market start to evolve to some degree, where some of these products actually give you that secondary optionality, which I think is going to be a catalyst, of course, for distribution, because now I'm investing in a product that I otherwise would have to hold, and now I'm able to invest in like a private credit or any private equity, whatever the case may be, and know that I have some option to kind of walk away from the table, not just get democratization to access the asset, but also to be able to walk away from the asset. And that's very important when you're dealing with a demographic like the retail or whatever the case may be that need that optionality.
What do you think, like forward-looking, like the bifurcation of the on-chain economy? Like largely speaking, it's been largely permissionless capital formation, crypto-native assets. I think, largely speaking, the growth is going to be from these off-chain assets coming on-chain. It's an interesting dichotomy of like permissionless chains, but also like permissioned assets coming. Would love to hear do you think the on-chain economy is largely going to be more bifurcated over time from an institutional, a retail perspective?
I don't think it'll be more bifurcated. If anything, I think if it's like a Venn diagram, I think it'll be a little bit tighter.
Okay.
If anything, I think there will be assets that are permissioned and ones that are permissionless, and then there'll be permission assets that may have derivatives that may be able to interact with the permissionless world, which we see with Securitize as BUIDL, and then they have SBIDL, which
Right.
is their permissionless, right? And so I do think there'll be variations like that that kind of cross both directions, but it's going to be up to the issuer.
Right.
The issuer at the end of the day knows their commitments from a regulatory perspective, and they'll know what is permitted, and then they'll try to push those boundaries. But I don't think it'll be further separated. I think it'll be closer to one another.
Got it. I think I have one final question. It's what asset class do you think is going to see the most transformational change due to tokenization?
Probably, cash and cash equivalent. I think that's I think the common denominator across all the different asset classes, right? Right? We always at Aptos pride ourselves of being able to support the fastest dollar in the blockchain environment, whether it's USDC or USDT or any of the other stable coins that we support. I think that's once you start there and you actually can give greater access and greater efficiencies around money movement, then you're able to, of course, go into a lot of other variations, other product types and so forth. But I think it has to start there.
Awesome. I know we're coming up on time. I don't have any other questions, but Solomon, it was really great chatting with you. Thank you very much.
My pleasure.
Yeah.
Thanks for your time.
Talk soon. Thank you, guys.